I'm Juan, lead trader and founder of Prosperity Trade. In this quick short video, I want to discuss Tesla. Is it overvalued or is it valued correctly at this time? Are the assumptions that it's going to reach 1, 2, 3, even as high as 15,000 correct? Or is it overvalued and should it be trading at 500, 200? This is the range of people that have given estimates or DCFs, evaluations to give the company's intrinsic value of what it should be trading on based off assumptions. So today we're going to try to break down how they come up with these numbers. We're going to take a quick look of our own DCF. We're going to compare it to ARK's. And I chose ARK because it's so popular. I'm not the number one biggest fan. While I respect the research, I'm not the number one biggest ARK fan, but I respect the research. So is Tesla overvalued? Firstly, in my opinion, yes, absolutely it is overvalued. Should you ever bet against Tesla? No, I would never bet against Tesla. But let's take a look at the screen here. So we're discussing Tesla. And if we look at this chart found on Bloomberg, in 2020, shorters lost a total of $38 billion betting against Tesla. So what does it mean to short a stock really quickly? When you short a stock, you assume that the price of that stock is too high or it's going to drop for whatever reason, whether it's a macro or micro reason. So let's say we have company XYZ trading at $10. My evaluation says it's hyped up, it's overhyped. I think the stock should be trading at $5. So I go to my broker and I ask him to borrow stocks of XYZ. So I borrow, let's say, one stock of XYZ. I sell it for $10. Now I have $10 credit in my account. I owe the broker one stock. I don't owe him $10. So now if that company, the price drops to that $5 that I assumed, now I'm going to buy that stock. I have the $10 initially when I sold it. I'll use the 5 from the 10 and I'll give the broker back the $5 and I just made $5 profit. So in a brief, that's what it is to short a stock. So people that shorted Tesla, they believe it's overvalued, and for legitimate reasons. You know, they do this off of good analysis, good assumptions. But Tesla has a mind of its own. It has a lot of followers. It has a cult following. So it's hard to beat. It's hard to bet against Tesla, and it's hard to bet against Elon Musk in general. So if we look at this chart here. Tesla, you see in 2020, anyone who shorted against it lost a lot of money, and it was the most money lost out of all the other out of these other companies here. They all lost under 10 billion shorting against Apple, Amazon, Square, but Tesla close to 48 billion, $38 billion lost in total shorting against Tesla. And this year, it's not better for people shorting against Tesla. There's still a lot of money lost. So really quickly. Bearish, we'll do a bearish case, a base case, and a bullish case for Tesla evaluation. So before we look at this, let me show you our DCF here at Prosperity Trade. So if we take a look here at the screen, this is a DCF. Basically, you're taking numbers of the past, let's say the last 5 years, and you're finding a pattern, and you're kind of assuming what they're going to continue to do 5 years in advance, ahead. You take those numbers and you do your calculations. You do, well, let's take a look here, for example, cars sold, right? So in 2020, they sold just under 500,000. 2021, 525,000. 2022, we're assuming that keeping this pattern, they're going to continue to increase in sales, and they're going to sell 848, over 1 million, 2 million, 2.8 million. And these numbers are the kind of the X factor. You know, you look at what they've done in the past, you're looking for a pattern. Can they maintain that amount that they're doing? But it's a guessing game, because if we look at, for example, this is my assumptions, and this is to me, this is pretty aggressive, you know. So these numbers that we're going to go over here in this DCF, this is even for the base case, the bullish case and the base case, I still think it's overvalued. If we look at ARK investments here, Their bear case, the Tesla sells 3.2 million, and their bull case is 7.1 million vehicles sold. That's really aggressive. That's a major assumption. For me, this is the base case. At bullish, we would say 3.7 million. So that's just under their bear case. And for bearish, 2.2 million. But let's stick with the base case here. So this is what analysts do. They make these assumptions. They make high assumptions. So the thing with EV, right? The thing that I'm looking at, okay, Tesla is a big name. Everybody knows Tesla. Everybody likes Tesla. A lot of people would like to own Tesla. Tesla is very marketable. I don't know if they're building a moat or have a moat for themselves in the EV sector. But the thing is, how can you make such assumptions, right? If you look at the total cars sold in the world, you know, it's a big assumption to have those type of numbers, especially now that GM, Ford, everybody's getting in the EV game. You have NIO, just a lot of companies are coming into the game. So as there's more competition, it's not something that is impossible to emulate. You know, it's not that they have the secret recipe for EV and nobody else has it. So a lot of companies that are already well established are getting into the EV game. So it's a big assumption to say that they're going to have 20% or 30% of that market cap. It's just going to be too competitive. Everybody's going to be competing for the top. So back to the screen here. So the same way you look at a 10Q or a 10K, you know, you have the car sold and what it cost to sell that car, everything that comes with selling that car, right? You have your product, you sell your product, and you have to subtract what it costs to sell that product and what it costs to make that product. So the same way you look at an annual report or a quarterly report, you can look at these numbers and it does the math for you, and you can see what would be your gross profit, right? So you make those assumptions. You make assumptions on gross property, plant, and equipment here, and we have a bullish bear case and a bearish case, okay? And depreciation. So you subtract all these things. We do the same thing for Tesla insurance, right? So Tesla insurance, again, ARK Investment is extremely optimistic. This is just a highly regulated sector. It's, you know, there's a lot of well-established companies. But playing along, we'll say, okay, percent of the cars sold with their insurance, we'll say 2%, then 4%, then 8%, 16, 25%. And their commission for that, bullish case, 12, 100, 100. And base and bearish, we'll just say 12%. Total insurance revenue, okay. So the same thing with the human-driven riding. So that's another factor that they're putting into the equation, okay? Percentage of cars sold into human driving ride hail network, and the amount they make per miles, okay? The percentages of what they make per miles, the autonomous fleet taxi, so percentage of fleet in China, robo-taxi platforms. These are the bullish and bear case, okay, and the amount that potentially they can make from their autonomous taxis. Their combined ride hail, again, doing this in miles, price per mile, and this is again bullish, bear, and base case. And I think in the base case for Kathy Woods, she's saying that they're going to make $3.50 per mile or something like that. But these are the amounts per miles. One of the main things you have to factor in, right? They have rights law. So the more you make vehicles, the cheaper it basically gets to make. That's another assumption that you have to make with this. But what are the key inputs? So gross margin. Will Tesla's cost of manufacturing vehicles continue to fall in line with rights law? So basically, as they make more vehicles, it's going to get cheaper to make, and they get to keep more profit. So there is a lot of science behind Wright's law. So that is something that's legit. That is something that is considered, especially for the car factory. There's examples of Ford and other car companies that you can see their, that application in place, and that how over time their gross profit grew as they made more vehicles. And I think their assumption is as they doubled their manufacturer sales, that the cost would drop by 15% or something like that. So all those things are factored in, and basically this is inputted where you just have to put the percentages, and it kind of gives you what the intrinsic value should be trading at. So we're saying at base case with those values, everything here that you see here at base, when it does the math according to the base, that stock should be trading at 489. And if we go bullish, 848, and bearish, 324. So for me, even bearish 324 is still too high. If it dropped all the way down to 300s, I would buy it, just because it's Tesla, and Tesla is going to do incredible regardless. So let's compare that to ARK. So bearish for ARK, they say 1500. Ours is 324. And again, you have to, these are some of the things that you have to consider, or we consider here when we're coming into the bear case. My bear case here, the insurance, same scenario as base, at $13,000 per car in 2021, getting down to $8,000 in 2025. The assumption made here is that the more capital expenditure spending is, the lower the cost per parts. And this is a Wright's law here. Also, factory utilization is something that has to be factored in when we have this here. So we look at the average utilization of factories are somewhere in the 70%. So that has to increase for them to be more profitable. So assuming on the bearish case, the assumption is that 60% of 21 is up to 75%, and industry average is 75%. And this is another thing, shortage in supply, chips. Those are all things that can affect these numbers. So also EV sales, the assumption here is that the company will sell 2.2 million EV cars in 2025. These are the assumptions for this number here. And basically ARK, they use this kind of the same information, but they're obviously a bit more optimistic than I am. For the base case, we're saying that 12,000 per car to goes down to making it 7,000, and that's again Wright's law. Factory utilization 75%, car sale 2.8 million, insurance. So all the things before, that gives you more optimistic here, 489. That's the base for my DCF. For ARK, 7,000, and bullish. Let's just say they're the best in the world and they take over everything. So cars, it gets down to 6,000 to make in 2025. That's how low the capital expenditure is. And this is our assumption here, this side. There's obviously a lot different. They use 80% factory utilization, while industry average is 75%. EV sales, electric vehicle sales, 3.8 million by 2025. So with those assumptions being way more bullish, we're saying 848, while ARK saying 15,000. So the difference here, according to this DCF, the downside, if you're bearish, down potentially have the potential of losing 48%, 22% at the base. And if everything goes right here in my bullish case, you have the potential of making 36%. So that was just kind of like a brief overview of how value investors look at a company, try to give it a value. If you're a value investor, you're most likely not going to buy Tesla. I'm not going to buy Tesla if I feel like I don't feel like I'm paying, buying $1 for 50 cents. You know, while I said there are times where, you know, while I do say that, you can look at some of the stocks that I've spoken on the past, and value investors would probably not invest in them. On some stocks, I just like the company, I like the technology, I like what they're doing, and I'm more of a growth investor on some of those. Tesla, I'm not going to bet against it, but I can invest in Tesla. It's a little bit too much high risk for me. I don't see the value. I just feel like Tesla moves because Tesla is its own world. The same way Elon Musk just has such a strong following and he can drop Bitcoin. He just has star power that doesn't make this company move the way that it should move. It's just, it seems irrational. So I believe Tesla is overvalued, in my opinion. This is just for educational purpose. You formulate your own opinion. And that's the end of the video. Thank you for watching. Please click the like, subscribe, and comment. Thank you for joining me. See you on the next video.